Have asset managers lost sight of client objectives? Well, joining us to answer that question and more is Duggan Matthews, investment professional at Marriott Asset Management in town. Duggan, I say in town, in Johannesburg, to come and talk to people about the whole state of the asset management industry. It's quite interesting. One of the points you put down there was performance is used as almost like a sales tool, but quite often you can perform well in 1 year, but through the cycle it could be a very different story. So performance, I suppose, has got quite a lot to it.
Yeah, I think good performance or good relative performance can come and go as markets fluctuate, and how asset managers have positioned their funds. It can be quite a volatile thing. You can go from the best performing fund to the worst performing or poor performing fund quite quickly, depending on what sectors do well. And what we've seen come out of coming out of research, both in the US and locally, is some statistics that suggest that not many asset managers are able to consistently outperform. So if you look in the US, for example, Charles D. Ellis, a big proponent of indexing, did some research, and he discovered that out of all mutual funds in the US, 60% over 1 year underperformed their benchmark, 70% over 10 years, 80% over 20 years. And if you look in South Africa, you've got similar statistics. Over the last 5 years, if you look at the general equity sector, only 20% managed to outperform their benchmark, the all-share index. And in the property sector, only one manager over the last 5 years managed to outperform.
Now that's logical, because the index, I guess, would be the mean, 50%, and then you've got to add costs to it. So it's very hard to beat the average and costs.
It's a very difficult endeavor. And I think because of that, and because of the pressure on costs and justifying your relevance in an investment landscape which is changing all the time, I think there's questions being raised over how much value active managers are adding to the equation. And we've seen passive management and passive management strategies gain popularity. I think in our roadshow, our message to investors recently has really been stemmed around that active managers can have a different benchmark which they look to achieve for investors. And one approach is an absolute approach, or where you target an outcome, specific outcome, rather than a relative outcome. So you've got an absolute mindset as opposed to a relative mindset.
Explain that.
So you're looking maybe for a CPI plus 3 or 5 or 7% outcome with some capital downside or low volatility. And we certainly think that that active managers can play a useful role here, with higher probability of adding value to the investor.
The problem is investors are greedy, as most human beings are. So CPI plus 3, they're not interested. They want 30.
Or maybe you can get CPI plus 7, but I think it's that human nature that causes investors to chop and change and look for the next best performing unit trust. But that can often result in, I suppose, arbitrary outcomes. You know, for us in this defined contribution pension system that we now operate under, what's vitally important for investors is to save enough for retirement, so that when they retire, they're able to replace their income and aren't forced to adjust their lifestyle.
So put a proper plan on the table and work towards it. Don't gamble.
Yeah, that's the approach Marriott takes. We're very much aligned with trying to provide investors with information that is likely to materialize, absolute information. So they can look at that information, use that information to recognize now, hopefully early on in their 30s, that this is how much I need to save today, so that when I do want to retire, be that at 55 or 60, that I'm going to be in a position to do that comfortably. And what we've seen certainly over the last couple of years is that many investors, unfortunately, are in a very difficult position when it comes to retirement. And I think an approach where you have an absolute mindset, where you're giving reasonable expectation to investors that are likely to materialize, with that information can be very useful.
Discipline in life, discipline in investing as well. Duggan Matthews is with Marriott Asset Management. He is an investment professional.